Hello everyone, my name is Denise Sanyurt. I work as a commercial real estate investment advisor. About 2 months ago, while we were in total shutdown, I shared with you my insights about Washington DC metro area commercial real estate market. Given that we are moving into phase 3 and opening for business, I decided to give you some new updates about the commercial real estate market of Washington DC area. Today, I'm going to talk about the Washington, D.C. metro area office real estate market. We have been going through unprecedented times. Everything we know has changed in commercial real estate. Now, let's dive in for details. In commercial real estate, we classify property types into 4 categories: retail, office, multifamily, and industrial. Today, I'm going to go over in detail about office real estate market. I will provide you information about the current situation, and also we'll try to give you some prediction for the future of Washington, D.C. metro area office market. The office market of Washington, D.C. metro area has already been suffering from higher vacancy before COVID-19. With the coronavirus pandemic, negative absorption rate is expected to push the office space vacancy rate to 15%. It is now, according to CoStar, 13.1%. We believe that it will take a few years before office demand to pick back up to the pre-COVID level. With its more than 1 million square feet lease space, WeWork seems to be the most exposed tenant in Washington, D.C. metro area office market. Depending on how the market reacts, co-working space companies might benefit from it or suffer from it. While higher level of hygiene standards and larger space requirements between individuals increase the cost of maintenance, the companies downsizing due to COVID-19 might choose to use co-working spaces instead of leasing full-scale offices. With COVID-19 pandemic, we are all pushed into working from our homes virtually, and also we are all pushed into working from our homes virtually, and most of us realize that it is actually working. The number of people working from home will continue to increase in the future as well, and office space absorption is directly connected with the employment levels. With the high level of unemployment, we can expect that there will be lower space to lease. The vacancy rates will increase, and the lesser employee means lesser space to lease. So this will have negative impact on the vacancies and also asking rents in the office market. According to CoStar, growth in Washington, D.C. metro area is now 0.7%. We expect to see that rate even go further lower. Companies were already reducing their space requirements. COVID-19 accelerated the trend. Given the uncertainty in markets, we expect to see shorter-term leads. Landlords will try to get the tenants in, and they will be willing to accept the terms that was not acceptable before. As for the investment in office building, we compare the last 6 months office type of property sales with the same term of the last year, and as you see from this chart, the sales volume increased from 3.1 billion to 3.6 billion, and the cap rate also increased in that market in this year. This means that even if we are selling more, the prices are not following the same trend in the cap rates, and also leading to increase in cap rates. In summary, If we summarize what we discussed so far, we expect to see virtual office is working, and we expect to see downsizing from the companies. People will opt for staying at home and working from home, and this will reduce the need for space. In fact, the companies may be not to reduce their space because of the distance between employees requirement, but I don't think they will be increasing and going out more space because they won't need it. Shared offices might benefit from this. Need for collaboration and socialization will push for the demand for office space. We are all social animals, and we would like to go to office, hang out, and best conversations take place over the coffee station, and we still will go for it. And I think it will be a positive impact on the demand for office. Unemployment rates are high. Job growth is very low. Lesser employee in the office means lesser space in total. We expect to see higher vacancies of 15%. Office space was already suffering from high vacancies. COVID-19 will accelerate the trend. Higher cap rates, lower prices are expected, and B and C class will suffer more. Shorter term leases expected, landlords will try to get the tenants in, and they will offer better terms as opposed to before COVID-19. Given the economic difficulties, tenants trying to get out of their lease obligations will try to sublease their space. This will lead to increase in subleases. Demand for office spaces at remote places will increase. Suburb demand for suburbs might increase. So we will see all these interesting developments in office market. And that said, with this presentation, I wanted to share with you my insights about the Washington, D.C. office market and during this COVID-19 pandemic. And I hope this is helpful for you, help you make better decisions. If you need further assistance, please give me a call. Phone number 571-271-6604. My name is Denise Sanyurt, and I look forward to hearing from you. Thank you.